Forex overtrading, the market stays. Traders leave. Here is the hook that hurts more the longer you deny it. Overtrading feels like discipline because it keeps you busy. Busy hands. Busy charts. Busy mind. Looks productive. Sounds committed. But it is the same noise that drowns your edge and feeds the itch. The market still waits. Your account does not. Pause and let that sink in. You came for profit. You said that on day one. You wrote it in your notes. You told your friends. You whispered it to yourself after each late-night session. Then time passed, and the statement faded. Not gone. Just buried under candles and dopamine. The first crack always shows up the same way, trading too much and staring at the chart like it owes you a living. You call it dedication. It reads as compulsion. Look at the pattern you described. Traders with less than 3.5 years in the arena crave being in a position at all times. Account blinking in real time like a heart monitor. That craving is not hunger for opportunity. It is fear of silence. Fear that if you look away, price will sprint and leave you behind, and you will miss the one. So you stack positions across multiple pairs at the same time, pretending it is diversification when it is just scattershot hope. You end a position, maybe a stop, maybe a weak take profit, and the hand twitches for a fresh entry. You say it is to stay engaged with the market. Call it what it is, chasing the feeling, not the money. And yes, the market offers entries on every time frame, from the 1-minute noise machine to the slow grind of monthly structure. That buffet is the trap. When everything looks tradable, your brain stops filtering and starts justifying. You are not seeing signals. You are manufacturing them. You are squinting at random fluctuation and calling it setup quality, because the alternative would be to sit with nothing open and face your own impatience. You do not want a plan. You want sensation dressed up as strategy. The mind trick is brutal and simple. Every glance at the chart whispers, there is an entry here, if you are clever enough. The market is not whispering to you. You are whispering to yourself. You project a pattern, call it confirmation, and press the button to silence anxiety for a few more minutes. The chart becomes a slot machine with technical lipstick. Every candle a spin. Every small win a shot of relief. Every small loss a dare to win it back. That is not passion. That is not passion. That is tolerance building. And tolerance always demands a bigger dose. You said it clearly, across 10 years of trading. Thousands of chances went by and thousands appeared. The market remained. Traders left. That line is the whole autopsy. You do not blow up because opportunities are scarce. You blow up because the constant availability of entries erases your threshold for what deserves risk. Abundance makes you sloppy. The screen time convinces you that motion equals edge. It does not. Motion equals temptation. The longer you stare, the more your brain hallucinates entries that fit whatever story you need to feel active. Now, consider the supposed fix you floated, work from the higher time frame. Not as a moral stance, not as a badge, but because human psychology buckles in short windows. That is accurate and ugly. In tiny slices of time, noise overwhelms structure, and your emotions outrun your logic. On higher frames, the random chop falls away. Liquidity is thicker. Levels are respected more often, and support and resistance have the weight of real participation behind them. That is not a romantic belief. It is a practical filter against your own volatility. You do not become smarter on a higher time frame. You simply remove enough chaos that your worst impulses have fewer excuses. Here is the knife twist. You say the goal is money, not excitement. Yet, You keep choosing excitement and calling it learning. You keep testing by pressing buttons and calling the outcome feedback. You keep sitting down without a real plan. Then you pretend probability will forgive you because you watched price action tutorials until 3 in the morning. No worries. The market will keep offering you baits forever. It is patient. Your capital is not. Your attention is not. Your nerve is not. So the core diagnosis of part 1 is straightforward and merciless. The addiction is not to profit. It is to participation. To the illusion that being in a trade means being a trader. The market is still here tomorrow. The opportunity is still here next week. The only thing not guaranteed to be here is your ability to say no to the next glittering setup that is actually just noise with better lighting. If the market does not run out of chances, why do you act like your clock is about to hit 0? And what does that desperation quietly do to your entries? Your stops. And your exits when the screen starts calling again. The desperation you feel after closing a trade and lunging straight into the next one is not hunger for opportunity. It is withdrawal. Pause. The account just took a hit or booked a small gain, and the screen feels like an unfinished sentence. The hand reaches for the mouse the way a mind reaches for noise when silence gets loud. You call it staying connected. I call it being tethered to real time, like a dog to a post. Pause. 90% of traders under 3.5 years keep that tether tight. A position humming, a P&L flickering, a heart rate pacing to the tick. The multi-pair stunt shows up next. Not portfolio thinking. Not edge stacking. Just spreading anxiety across symbols so the illusion of activity looks like strategy. One chart stalls, so another gets recruited. The brain stops asking about quality and starts chasing quantity. More pairs. More noise. Same emptiness. Pause. Then comes the ritual after a stop or a timid take profit. The quick re-entry. The brain tries to cancel discomfort by replacing it with control. That is why entries appear where none existed 5 minutes ago. The chart did not change. Your tolerance for sitting flat did. You tell yourself you are adapting. Translation: the last outcome bruised your ego. And now, the button becomes first aid. The market did not invite you back. You invited yourself. Pause. Availability makes it worse. Every time frame is a vending machine. 1 minute, 5 minute, 15 minute, 4 hour, daily, monthly endless buttons to press. The lower you go, the more your emotions outrun your logic, and the more plausible any zigzag looks when you need a reason to act. Random blips get framed as signals because waiting feels like failure. When every candle is a door, patience feels like standing outside in the rain while other people go inside. Pause. The fear that price will sprint without you is not about missing money. It is about missing identity. Being in the market becomes the costume you wear to feel like a trader. That is why the account can be bleeding and the mind still says, one more entry and it will all make sense. The fixation is not profit. The fixation is presence. Without a position, you feel invisible to yourself. With one, even a bad one, you feel relevant again. Pause. You point toward higher time frames as a counterweight, and you are onto something. On larger frames, noise steps back, liquidity thickens, and structure stops pretending. Support and resistance stop being stick figure lines and start acting like concrete. Not because the market respects your lines, but because enough real size cares there. That filter protects you from your worst impulses. It does not cure them. A higher time frame turns down the volume. Addiction still dances to any music, It can hear. Pause. Here is where the trap tightens. You move to the higher time frame, but the impatient brain smuggles the lower time frame urgency back in through expectations. You scroll the 1-minute feed while waiting for the 4-hour setup, and suddenly you are stitching micro impulses onto a macro chart to justify an early click. You call it precision timing. It is just finding a smaller stage for the same itch. New suit. Same gambler. Pause. And that old line still stares back. The market stays. Traders leave. Overtrading is the exit door disguised as dedication. The more you answer word, chase presence, the more you water down standards. The more you water down standards, IOAs, the more your stop placement gets emotional. Your take profit gets timid, and your so-called diversification becomes scattered revenge. Then you wonder why your equity curve looks like a heart monitor and not a staircase. Pause. The original promise was money, not stimulation. Yet the behavior betrays the promise. The plan is foggy or non-existent, so probability gets replaced by volume of attempts, as if enough coin flips could morph into skill. The chart becomes a mirror reflecting impatience, not information. The saddest part is simple. None of this is because the market is cruel or cunning. It is because the constant ability to act exposes the parts of you that cannot sit still. If higher time frames filter noise but the mind keeps re-importing chaos, what happens when the next perfect setup appears and the same restless hands try to optimize it in the last 30 seconds before the candle closes? The next layer is uglier because it hides behind competence. You stare at the chart and swear you hear it calling. Price breathes. Candles blink. A level looks too clean. A wick looks too obvious. And there is a validity and will be. Suddenly, the brain translates background noise into a personal invitation. You are not listening to the market. You are listening to the echo chamber between your fear and your craving. Pause. That self-talk manufactures entries out of thin air. The script goes like this. There is always a level nearby. There is always a micro swing. There is always a candle pattern you can name to sound precise. When you want action, confirmation becomes a costume you throw over randomness. You point to confluence. You circle a zone. You say structure. The truth, you wanted the click first and found the way. Reasons after. No worries. Right. The account will handle it. Until it doesn't. Pause. Here is the systemic failure few admit. Overtrading is not just too many trades. It is a slow rewiring of standards. Risk per idea weakens. Stops creep wider to defend ego, not edge. Targets shrink because patience is burnt by constant exposure. You call it taking what the market gives. It is taking what your anxiety allows. The math flips. A so-called high win rate streak hides the fact that the winners are trimmed and the losers drag, and the expectancy slides underwater while you still feel busy. Pause. The multi-pair carousel looks intelligent from the outside and desperate from the inside. You rotate symbols to escape accountability. Each new pair resets the narrative, which means the last mistake gets buried under a new candle. The illusion of fresh opportunity bleaches the stain of the last impulse. You think you are diversifying. You are actually diversifying your excuses. One chart almost respected a level. Another nearly broke out. Another should mean revert. Almost. Nearly. And should are the three horsemen of getting wrecked. Pause. Then comes time compression. Lower frames promise precision. They deliver stimulation. You zoom in to justify early entries on a higher time frame idea, and the microscope starts inventing reasons to act. Every tick pretends to be signal. You tell yourself you are front-running the crowd. What you are actually front-running is your plan. The candle has not closed. The level has not proven anything, but impatience has already signed the ticket. The outcome, win or loss, teaches the wrong lesson either way. A quick win reinforces the itch. A quick loss demands immediate redemption. Both keep the loop alive. Pause. You mentioned paying attention to the mind because the chart always calls. That is the right door, and most traders still refuse to walk through it. The call is not mystical. It is mechanical. Your brain learned that pressing the button reduces tension. The chart is a relief machine wearing financial clothes. So, you open the platform to feel less uncertain, not to execute a plan. That is why the entry appears only after discomfort spikes. That is why the setup quality bends to the emotion of the moment. That is why a flat position feels like punishment, and a bad position feels like oxygen. Pause. The traps are polite. The clean bounce that tempts you right after a stop. The perfect retest that forms one candle before your rule would confirm. The wicked wick that taps your level to the pip and sprints the other way when you finally bail. You call it market manipulation. Convenient. The deeper truth is harsher. Your rules are props you drop the second they block your need to participate. The market is not tricking you. Your urgency is. Pause. You bring up larger frames, in stronger liquidity, sturdier levels. Good. Those are not magic. They are guardrails. They reduce the number of decisions you can rationalize per hour, which starves the compulsion of oxygen. Yet, even there, a restless mind can smuggle chaos back in by micromanaging entries, choking stops to optimize, or stacking partials to feel clever. You invent micro-rules to regain the stimulation the higher time frame just removed. Discipline without acceptance is cosplay. It looks like order. It behaves like panic wearing a suit. Pause. Now, the hardest admission from your own content. The goal was money, not passion. But you kept feeding passion and calling it education. You watched charts to feel alive, not to gather signal. You tested edges by doing more of the same and collecting anecdotes dressed as data. You said you had a plan. Then you sat in a position and waited for luck to co-sign your decision. Probability cannot compensate for a plan that only exists when you are calm and disappears when you are triggered. Pause. You end with a line that cuts clean. Life changes when you stop pushing. In trading terms, the change only starts when you stop forcing presence to prove identity. The market stays. The chances keep coming. The real scarcity is your ability to keep standards intact when the screen hums and your pulse argues for action. If the chart is not the siren and the mind is, what happens when the next clean setup appears and you still try to glue urgency onto it in the final seconds before confirmation? And what does that reveal about the difference between your naive idea of control and the harsh reality of how control actually gets built? Naive thinking says more charts, more pairs, more time frames equal more control. Harsh reality, more variables just give your anxiety more costumes to wear. The dashboard gets brighter, the decisions get dumber, and the inflated sense of mastery pops at the first sharp wick. Busy has never meant skilled. Pause. Naive thinking says being in a position at all times looks professional. Harsh reality. Professionals are measured by selectivity, not by how many blinking numbers they can babysit. The market stays open almost around the clock, exposing a gap, your urge to prove relevance versus your account's need for asymmetry. Presence feeds the ego. Pause. Naive thinking treats a rapid re-entry after a stop as resilience. Harsh reality. That quick click is tilt wearing a cape. Stops creep wider to protect pride, not the thesis. The ledger starts whispering the truth, high activity, low conviction, and an expectancy that bleeds in slow motion. You call it adapting. It is the same mistake. Faster. Pause. Naive thinking worships the lower time frame as precision. Harsh reality. It is stimulation. The microscope invents patterns that do not exist at the auction scale that actually pays. The candle has not closed. The level has not proven anything. But anticipation signs the ticket and calls it timing. In practice, being early too often just means being wrong with fees. Pause. Naive thinking says diversification across many symbols equals safety. Harsh reality. You are diversifying your excuses. Each pair becomes a new stage to replay the same impulse. The sequence hides the sameness. A near breakout here, an almost mean reversion there. A should-be retest somewhere else. Ender, a company I look for. Vocabulary changes. Behavior does not. Pause. Naive thinking calls the market a whisperer. Harsh reality. The only voice is the loop that learned to silence discomfort with action. Confluence becomes camouflage for impatience. You circle zones, stack reasons, and pretend the story is robust. Under the hood sits one, driver, the need to feel engaged. When discomfort spikes, so does the urge to find a reason. Pause. Naive thinking imagines the higher time frame as a cure. Harsh reality. It is only a filter. Liquidity thickens, levels gain weight, and noise steps back. Yes, but the compulsion smuggles itself in through micromanagement. Stops get nudged to optimize. Entries get sliced into partials to feel clever. And the 1-minute chart gets borrowed to add adrenaline to a 4-hour idea. The suit looks tailored. The gambler is still inside. Pause. Naive thinking equates flat, exposure with cowardice. Harsh reality. Flat protects optionality, attention, and nerve, 3 capitals you keep spending like they are free. Flat lets the plan breathe. Overtrading suffocates it. Once the mind is cooked, even a clean setup gets handled with shaky hands and brittle rules. Pause. Naive thinking labels a stop as failure and a quick take profit as prudence. Harsh reality flips it. A stop at the right threshold is rent. A quick take profit is fear cashing out of the edge you claim to trust. Overtrading amplifies both. Losers get defended longer for redemption. Winners get strangled sooner for relief. Expectancy gets crushed between those jaws. Pause. Here is the hidden corner your content points toward. Abundance distorts feedback. When everything looks tradable, the learning loop gets polluted. You cannot isolate which decisions produced which outcomes, because time frames, pairs, and rules kept shifting to soothe emotions in the moment. Edge drift replaces edge building. You are not iterating. You are shape-shifting. The market stays. Chances keep coming. And the account keeps paying tuition to the same illusion. If the contrast is this stark, what kind of lens actually drains fuel from this loop without turning discipline into cosplay? And how would that lens reshape entries, stops, and exits when the screen starts calling again? The exit is not heroics. It is engineered boredom. The opposite of overtrading is not undertrading. It is selective exposure built to starve the itch. The plan stops pretending to be a motivational poster and starts acting like a throttle. Less pedal, more control. Money over stimulation. On purpose. Pause. Start with the goal you buried under candles. Profit, not presence. In that frame. Flat is a position with positive optionality. Flat preserves three scarce capitals: attention, emotional bandwidth, and risk capacity. Presence burns all three for the price of feeling relevant. The alternative lens treats boredom as compounding. Every minute, not in a low-quality idea, is interest earned on discipline. That flips the incentive. You stop asking, "What can I trade?" and start asking, "What deserves risk?" The difference sounds semantic. It is the whole edge. Pause. Higher time frame becomes a gate, not a shrine. It filters noise. Yes, but more. Importantly, it limits decision count, so your worst impulses have fewer exits. The structure is simple and ruthless. Either the context is aligned or exposure stays at zero. No half measures to soothe nerves. Confirmation means a candle closes where it needs to close, not where anxiety wants it. Entry timing stops being a race and becomes a handshake between thesis and proof. When the proof is not there, the handshake does not happen. No resentment. No, the market tricked me. Just no deal. Pause. Risk gets reframed from comfort management to edge expression. A fixed risk unit per idea becomes a keel, not a variable you stretch to defend pride after a loser, not a toy you shrink to sneak back in early. Cut your losses hard stops being a slogan and becomes the cost of staying eligible for the next high-quality chance. Targets breathe because patience funds them. Overtrading suffocated patience. Selectivity resuscitates it. You do not trim winners for relief. You let them prove you were right for a reason beyond luck. Pause. The carousel of pairs collapses into focus. Breath looked safe. It was just a bigger playground for impulses. Depth looks plain. It is how context stops drifting. One primary instrument, maybe a secondary for different volatility regimes, and a rule that narrative cannot reset just because a new ticker looks fresh. Same auction, different actors, identical psychology. When the environment shows your pattern, the plan speaks. When it does not, flat holds the mic. Pause. Time compression loses its pedestal. Precision without permission is just earlier fees. The microscope serves the telescope, not the other way around. Lower frames can assist execution, but only after the higher frame thesis is locked. No, front-running confirmation dressed up as skill. If the idea is valid, it will still be valid when the candle closes. If it dies during the wait, it deserved to die without your money attached. That single constraint drains more tilt than any pep talk. Pause. The mind management becomes operational, not inspirational. Cooldowns replace revenge. After any exit, win-or-loss exposure stays at zero for one full decision cycle, measured in closed candles on the anchor time frame. Not to punish, to reset perception. The first chart you see after pain will always look tradable. That is the trap. A forced pause makes the next read less contaminated by the last bruise. The loop loses oxygen. Pause, and every 7. You hinted at a real plan and then undercut it by enter and wait for luck. Flip it. A real plan reads like an if-then statement with clear invalidation. If context A and trigger B align, risk unit C is deployed with stop D and target E. And nothing between entry and exit changes the thesis except invalidation. No improvisation to scratch anxiety. No micromanagement to feel clever. The only adjustments are pre-authorized, scale out where auction logic says supply should respond. Trail where structure confirms continuation. Anything else is cosplay. Pause. Account identity shifts too. The badge is not always in the market. The badge is rarely exposed, frequently prepared. Journaling stops being diary therapy and becomes a scoreboard for standards. Did the setup meet the plan as written, or did you bend the rules to feel alive? The answer decides whether a win counts as signal or noise, whether a loss is rent or recklessness. The data stops lying when the behavior stops shape-shifting. Pause. This boring by design approach will look slow to a mind hooked on flashing numbers. It will feel like weakness at first because action used to be the bandage. Then, equity stops looking like a heart monitor and starts resembling a staircase with small dents where you paid rent and bigger steps where patience finally got paid. The market stays. The chances keep coming. If abundance is guaranteed, scarcity must be self-imposed. So, the question turns sharp again. When the next pretty setup appears and the clock is ticking, will the plan still be the throttle, or does the old urgency sneak back in and hijack the wheel in the final seconds before the candle closes? The threads tie together without a bow because this is not a feel-good story. It is a functional one. You came for profit and drifted into participation. You watched the chart until the chart watched you back, and the feedback loop crowned urgency as king. The market stayed patient. Your standards did not. Pause. Everything in your original content points to one axis: presence versus payoff. Presence made you feel like a trader. Payoff demanded you behave like one. Presence asked for action. Any action, preferably now. Payoff required context, confirmation, and costs paid on schedule. Presence chased stimulation on the rad, smallest frames and across too many pairs. Payoff lived where structure had weight, where noise got filtered, where a plan could actually breathe. The tension between the two is not philosophical. It is operational. Pause. The mind did not betray you in a single moment. It trained itself, trade by trade, to equate relief with clicking. That is why the chart called even when nothing of substance changed. That is why a stop felt like an insult instead of rent. That is why a quick take profit felt like prudence instead of fear. The platform became a relief machine dressed in price data. And because the market offers endless entries across all time frames, the relief was always one rationalization away. That is how overtrading quietly rewired standards. Not with a blow-up. With 1,000 tiny permissions, a pause. Your own solution hints are sharper than you gave them credit for. Higher time frame as a filter, not a shrine. Flat as a position, not a failure. Risk as the expression of edge, not a bandage for pride. Cooldowns, measured by closed candles after any exit. Win or loss. Because the first read after emotion is always a lie. Journal entries that score, standards, not feelings. So, wins that break rules get labeled noise, and losses that honor rules get labeled rent. Boredom as compounding. Selectivity as oxygen. All of it attacks the same thing, the urge to be present for its own sake. Pause. The plan stops being theater when it limits decisions. The throttle metaphor matters. A rule that says, if the anchor context is not aligned, there is nothing to execute. Takes the air out of the machine that once fed on micro impulses. The microscope serves the telescope. Lower frames can refine entries, but only after the higher frame handshake is complete. If the candle must close above or below a level to validate the thesis, then it either does or it doesn't. No drama. No front-running confirmation turned into a brag after the fact. If the idea dies during the wait, your money was never at its funeral. Pause. Identity shifts too. You stop proving you are a trader by being in a trade. You start proving it by how cleanly you say no. not to everything. 2. Almost everything. The market's abundance is the joke. There are more setups than your account, your attention, and your nerve can process without warping your standards. So, scarcity becomes self-imposed, fewer instruments, fewer triggers, fewer exceptions. That scarcity is where expectancy lives. The equity curve stops mimicking a heart monitor because you stop trying to keep your pulse in sync with every tick. Pause. The original line, life changes when you stop pushing lands harder in market terms. Pushing meant forcing entries to soothe anxiety and calling the outcome feedback. Not pushing means letting invalidation do its job, letting targets breathe, letting the next chance arrive without you stalking it on the 1-minute chart with a ruler and a prayer. The irony is brutal. When you stop trying to be everywhere, your best places finally stand out. When you stop treating flat as a punishment, your charged shots finally have room to travel. Pause. This is not moral. This is mechanical. The auction rewards patience because patience lets real information accrue. The auction punishes agitation because agitation manufactures false signals to justify itself. You do not need a new gospel. You need fewer levers that your fear can yank the moment uncertainty spikes. Fewer levers means fewer trades, but not because you are timid. Because the opportunity, cost of action without edge, is finally visible. The market stays. The chances keep coming. The only timer that matters is the one on your ability to keep standards intact while the screen hums and promises a shortcut. Pause. So, here is the sharp end. If presence addiction was the hidden thesis all along, then engineered boredom is the counter trade. You are either expressing an edge or you are treating anxiety. Both cannot happen at the same time. When the next pretty setup appears and the clock ticks down, either the plan remains the throttle, or the old urgency steals the wheel in the final seconds before the candle closes. The market will not argue with you. It will simply invoice you. Pause. If this hit home, share it with the buddies who keep almost catching every move and keep nearly breaking even. Subscribe to Mind Over Markets if you want more of these razor-sharp breakdowns without the pep talk sugar. The market stays. The traders who learn to stay selective get to stay too. The rest get wrecked and write threads about manipulation. Your move, not your mood. Pause.